This is not financial advice. I'm recording my thoughts about Sea Limited. The stock is currently trading at about $59 with a market cap of about $33 billion. And I'm seeing a multi-bagger opportunity here with reasonable risk. That's why I took a position in Sea Limited today. In this video, I'm going to go over Sea Limited's business model. Then I look at the financials and finally I'll do a valuation to show the upside. Let's start with the business model. Sea Limited has three different revenue segments: Garena, Shopee, and Sea Money. Garena is their digital entertainment segment in which they sell games like Free Fire. Shopee is the e-commerce platform and Sea Money is the payments platform. Garena's revenue has high margin, whereas Shopee and Sea Money's revenues have lower margin. Therefore, it is preferable that they grow their revenue in the Garena segment, which is a high margin segment, than the lower margin segments like Shopee and Sea Money. But we will see what's happening with these individual business segments when I show you the financials. Let's look at their most recent quarter results. The revenue was about $3 billion, which represents only 4.9% year on year. That is low single digit revenue growth. And the gross profit was about $1.4 billion, which represents about 45% gross margin, which is a healthy margin. The total net income is actually positive this quarter. It's about $87 million. They are barely profitable at this moment, but I'm going to show the financial statement on how they could achieve this profit. But based on this profit news, the stock went up to about $80 and then it came back to $59, right? So we will see why that happened when we look into the financial statements. The cash equivalents, and short-term investments are about $7 billion, so that is good news. Before we do the valuation, we need to dig deep into the financial statements because they only grew about 4.9% in the most recent quarter. And when we look into the financial statements, we'll get a better understanding of where that growth is, and that'll help us in doing the valuation correctly. As you can see on the screen, the revenue rose from $2.89 billion to about $3 billion. I've highlighted that in sky blue color, which represented this 4.9% revenue growth. But let's look at their individual revenue segments. Digital entertainment, the high gross margin business like Garena, the revenue fell from $1.1 billion to $539 million. That's a drop of almost 52.5% in their highly profitable business. It seems like Garena's revenue is falling from the cliff. Obviously, that is a really bad news. But in the e-commerce and other services, that is Shopee and Sea Money, the revenue increased by about 50.7%. It rose from about $1.499 billion to about $2.259 billion. So even though this is good news that the revenue rose by about 50%, it is still a low margin business. So as I said before, it is more preferable to have increase in revenue in a high margin business than a low margin business, but still they could offset some of the loss they got from Garena. And let's look at the sale of goods, $264 million to about $241 million. That's a drop of 8.7%. But when compared to the total revenue, this sale of goods is negligible. So therefore, I'm not going to consider that in the valuation. As you can see on the screen, look at the purple line first. That's the digital entertainment segment, which dropped its revenue by about 52%. The cost of revenue was only about $173 million off of a revenue of $539 million. So that's a 70% gross margin business. Look at the green line. That is the Shopee and Sea Money business, which has much higher cost of revenue and only results in 45% gross margin. And red line shows the overall gross margin, which is 46%. That is still a healthy number, but it is definitely a huge concern that the digital entertainment segment, which is the highly profitable segment, is falling off the cliff with respect to revenue. Now let's look at how they could manage a profit in the most recent quarter when they were making huge losses the year before. The main reason for that is the highlighted portion on the screenshot that I'm showing. They reduced their sales and marketing expenses by about $600 million. In quarter one of 2022, they spent $1 billion for sales and marketing expense, but in the most recent quarter, they could only spend about $400 million. So that's a huge reduction in sales and marketing expense. And I think that also partly contributed to the slower revenue growth of 4.9%, but it seems like they're determined to show a profit to save the stock. Since there is a huge reduction in the sales and marketing expense by $600 million, they could barely make a profit of $87 million in the most recent quarter. It is still good news, but reducing the sales and marketing expense definitely has shown an effect on the growth rate, which was low single digit. Before we move on to the valuation, I want to clarify three things. Number one is their high gross margin business, Garena, is falling off the cliff. The bookings are lower and lower in the coming quarters, and that is definitely going to hurt the margin. Number two, their e-commerce and payments platform, Shopee and C-Money, are growing at about 50% year on year in the most recent quarter. So that is definitely good news, but it is a low margin business. Number three is they definitely made a profit in the most recent quarter. It was very low, but then it was not a result of strong execution. It was because of the sacrifice that they made in the sales and marketing expenses, which actually affected their growth rate. So we need to understand these 3 points before I move on to the valuation. Now let's get started with the valuation. As usual, I'm going to show two cases, one with reasonable assumptions and the other with great execution. As I said before, we are dealing with two different revenue segments. One is falling off the cliff and the other is growing significantly. So I cannot value them together because in the most recent quarter, they could only grow about 4.9% overall. So for the future, should I only assume single digit revenue growth or double digit? There is no basis for that, right? So for this kind of valuation, I like to separate the businesses out because they are very, very different from each other. That's why I'm going to do valuation of Garena separately and C-Money plus Shopee separately because both of them are very different with respect to margins and growth rates. So you see the Shopee and C-Money valuation first. In 2022, they made about $8 billion of revenue with Shopee and C-Money. Garena is separate, but I'm only showing the revenue for Shopee and C-Money. In the most recent quarter, they grew their revenue by about 50% year on year, right? But I'm only assuming 32.5% in the coming 5 years because as the company gets bigger and bigger, it's hard to grow. But again, C-Money and Shopee are at the early stages, so they can still grow more than 30%. So that's why I assume 32.5%. With that, they will have a revenue of about $33 billion in 2027. E-commerce business and payments platform both are low margin businesses. Even though their gross margin was about 45%, it's hard to achieve a double digit net profit margin because the operating expenses typically are very, very high for these kind of businesses. That's why I'm assuming 7.5% net profit margin, which I think is reasonable. With that, they can make about $2.45 billion of net income in 2027. For a company that's growing at 32.5% and a net profit margin of 7.5%, I can comfortably assign a multiple of 20. But since C-Money and Shopee has a moat in the Southeast Asia region, I can assign a multiple of 25, which is a premium multiple. With that, this company would be worth about $61 billion in 2027. The number of shares currently are about 568 million. They have no reason to dilute the shareholders because they have close to $7 billion of cash on the balance sheet. That's why I'm assuming no dilution in the coming years. When I divide $61 billion of market cap with 568 million outstanding shares, I get a stock price of about $108 in 2027 for Shopee and C-Money only. Currently, they're at $59, right? That's about 83% gain in 5 years, not considering Garena. So let me consider Garena. In 2023, they're on track to make about $2 billion of revenue. With respect to estimated growth rate, I'm assuming minus 15%. This company has weaker bookings in the coming quarters, so I would be surprised if they grow from $2 billion of revenue. So I am assuming minus 15% growth, with which they will have $1 billion of revenue in 2027. I think this is reasonable because this business is falling off the cliff. The number of paid users are also reducing significantly. And the net profit margin would be about 25% because this is a high gross margin business, right? 70% plus gross margin. So I can comfortably assign a 25% net profit margin, with which they can make about $260 million of net income in 2027. With respect to multiple, I'm only going to assign 10 multiple because this seems like a dying business. With that, they would be worth about $2.61 billion in 2027. When I divide 2.61 billion with 568 million outstanding shares, the stock price would be $5 for Garena. Now let me put these two pieces together. Shopee and C-Money would be worth about $108 in 2027. Garena would be worth about $5. So when I put them together, C Limited should be worth about $113 in 2027. Current price is about $59, so that's about 100% gain, or 2x our money with reasonable assumptions. Now let's move on to the great execution case. Again, I'm going to show C-Money and Shopee valuation separately and Garena's valuation separately. For the Shopee and C-Money, as you can see on the screen, I'm assuming 40% growth rate. I think with great execution, they can get to 40% because e-commerce is still at the early stages in the Southeast Asia region. So with 40% revenue growth for the next 5 years, they can make about $43 billion of revenue in 2027. I'm assuming 10% net profit margin. Remember that payments platforms and e-commerce businesses are low margin businesses. So getting 10% is very, very hard. Typically, the margins would be in single digits. Since this is a great execution case and C Limited has demonstrated that they can cut operating expenses significantly to show a profit, I'm assuming that they can get to 10% net profit margin in 2027. With that, they will make about $4.3 billion of net income in 2027. That's growing in the 40% range and has a 10% net profit margin. I can happily pay a multiple of 25, but I'm going to pay a little bit of premium for Shopee and C-Money. That premium is about 27.5 multiple. With that, C-Money and Shopee market cap would be about $118 billion in 2027. I'm assuming no dilution because they have a lot of cash. With that, the stock price would be about $208 for Shopee and C-Money. Currently, they are at $59, right? So that's about 253% or 3.5x our money in 2027 just with C-Money and Shopee. So let me show you the Garena's valuation in great execution. In great execution, I'm assuming that they're not going to decelerate further. They will maintain $2 billion of revenue till 2027. And I'm keeping the same net profit margin of 25% and a 15 multiple because that's a cash cow multiple. With that, they will be worth about $7.5 billion of market cap in 2027. When I divide the market cap of $7.5 billion with number of shares 0.568 billion, I'll get a stock price of $13 for Garena in 2027. Now for great execution, let me put these two pieces together. Shopee and C-Money would be worth about $208 and Garena would be worth about $13. So when I put them together, C Limited should be worth about $221 in 2027. That represents about 3.75x or almost 275% gain in 5 years. So that's a multi-bagger. In conclusion, I am looking at a 2x in the reasonable assumptions case and almost 3.75x in the great execution case. So this definitely looks like a favorable risk reward to me at $59 stock price. And that's why I started a position in C Limited. And I'm going to follow this stock in the coming quarters. And as they execute better and better, I'm going to add to my position. This is a bit complicated valuation. So if you don't understand, please watch the video again. Let me know your thoughts in the comments if I'm doing any mistake by buying this stock at this price. Thank you so much for watching.